So good afternoon, Mr. Injati.
Ah,
Desai here. 5 seconds I thought I'll take to say hello to you.
yes, Mr. Nishit.
You've done a wonderful job.
Sri Injeti Srinivas, Chairman IFSCA, distinguished guests, members of the media, ladies and gentlemen. A very warm welcome to you all to the 12th edition of CII Financial Market Summit and to this very special session on IFSC, positioning India as a global financial hub with Sri Injeti Srinivas. Sir, at the outset, we would like you to thank you for your precious time. You have been a long-standing friend and guide to the industry and to CII, even in your earlier avatars. As IFSCA chairman, you have been open and interactive on various issues raised by industry and CII, and you have actually defined regulator as a facilitator rather than just controller. Sir, if I have to describe your role, I can't think better nomenclature than Raja Bhagirath, who tried to bring Ganga from heaven to earth against all odds. You are trying to bring offshore capital markets to Indian shores against all odds. And like Raja Bhagirath, you are successfully doing it. We wish to reassure you that whatever support you require from our side, we will always be forthcoming. We value your guidance and support and relationship. Though Chairman Sir doesn't really require any introduction, but for the benefit of participants, Sri Srinivas retired from service on superannuation in March 20 after serving for nearly 37 years in various leadership roles in the Government of India and the Government of Odisha. He is a graduate in economics from the Sri Ram College of Commerce, University of Delhi, and did his master's in business administration from Strathclyde Graduate Business School, United Kingdom. He served as Director Foreign Investment Promotion Board during 98 to 2003. He was closely associated with the liberalization of foreign direct investment policy and industrial policy reforms, including placing most sectors under the automatic route and delicensing many industrial sectors. As Union Secretary to the Government of India in the Ministry of Corporate Affairs, he played a key role in the implementation of several major economic reforms carried out by the government, including the most talked about Insolvency and Bankruptcy Code. This code has deeply impacted the borrowing culture in the country and helped banks effectively tackle their problem of non-performing assets. He was also responsible for major initiatives on the corporate governance front, including strengthening the institution of independent directors. He chaired several committees constituted by the Union Government of India. The prominent ones includes the Insolvency Law Committee, Competition Law Review Committee, Committee on Decriminalization of Companies Act, and High Level Committee on Corporate Social Responsibility. He is currently a member of the Financial Stability and Development Council and the subcommittees under it. Sir, under your guidance and leadership, India's first IFSC at the GIFT City made its global mark, being named among the top emerging business hubs in the world. Going beyond just being the Prime Minister Narendra Modi's dream project, GIFT IFSC empowers Indian banking and financial services and insurance sector. It enables Indian business organizations to compete with global players without the need to set up an office in global finance center like Delhi, Dubai, like Singapore, Dubai, or London. The recent past has seen it expand areas and activities which can be based within the IFSC, further empowering India's competitiveness across global platforms. On this note, without further ado, I would like to invite Sri Injeti Srinivas to please enlighten us with his thoughts. Thank you.
Thank you very much, Mr. Nilesh, for those kind words of introduction, which I actually hardly deserve that sort of comparison anyway. Very kind of you. At the outset, I would like to thank CII for organizing this special plenary session on how IFSC can be leveraged to make India a global financial hub. I'm also very thankful to CII for giving me this opportunity to address this summit on this very interesting and evolving topic. When we talk about the IFSC, the common perception is that it is an outcome of the Percy Mystery report, which way back in 2007, a committee constituted by the Government of India, it had submitted its report. And the general perception is that the committee recommended that the IFSC should be set up in Mumbai. Contrary to the general perception, I would like to mention that the Percy Mystery report made three very important recommendations. The first and foremost recommendation was that the controls on capital account convertibility should be fully dismantled. So there should be full convertibility on the capital account. This was the first recommendation of the Percy Mystery report. Second was to carry out large-scale reforms in the financial sector, including setting up a unified financial regulator for the whole of India. The third recommendation of the Percy Mystery Committee was that government should privatize the public sector financial institutions. So these were the three broad recommendations, but the recommendations came at a time when we were hit by the financial crisis of 2008. So all these recommendations relating to easing the exchange controls, etc., could not be considered at that point in time. Now, in 2015, the government set up the maiden International Financial Services Center in the GIFT City. And by this, took a conscious decision to adopt an enclave approach. That means whatever recommendations were made by the Percy Mystery Committee were in a way implemented in an enclave. So in the IFSC, you have full convertibility in the sense that FEMA is not applicable to the IFSC. Similarly, since it's also set up under the Special Economic Zone Act, even from the customs angle, it is an international zone. So we created a zone which is like an offshore jurisdiction within the territory of India. The primary purpose of doing so has been to bring back to India the international financial services business emanating from India, but being conducted offshore. As a large economy, we conduct a lot of our procure a lot of our international financial services from offshore jurisdictions like Singapore, Dubai, Hong Kong, London. Now the question is, when we have such a well-developed financial sector, when we have so much of financial expertise, why can't we not only meet our own requirement of the international financial services, but also provide the services to the region, nearby region, and at the global level also in due course. So in the first instance, at least we serve South Asia. We become the preferred destination for the South Asian countries. Then we can look at Middle East and North Africa. Then we can look even further. So that has been the most important, purpose of creating this special financial zone. There are many unique features of this IFSC and the IFSCA. As I mentioned, for the first time, you have a unified regulator. There are many advantages of having a unified regulator because there is a requirement of seamless integration of the financial sector. These are not watertight compartments. There's a lot of intermingling. So if you have one common regulator, many coordination issues get automatically resolved. Also, you, by virtue of your very nature, will have a holistic view of the financial sector. So that is one major benefit flowing out of a unified regulator. Second, it is a highly empowered regulator in the sense that the IFSCA has been empowered under 14 different central acts, under which the RBI, SEBI, IRDAI, and PFRDA function. So the scheme of things under the IFSC Act make IFSCA exercise the powers of the domestic regulators with respect to financial institutions, products, and services in the IFSC. So this is one very major unique feature again. That means we did not have to reinvent the wheel. We empowered the new unified regulator by giving them the powers to exercise various functions under the respective acts. The other important factor is that by virtue of having a treatment of being a offshore center, at the same time being located within the territory of India, you have best of both worlds. You can get the benefits of being a domestic entity. At the same time, you can get the benefits of being a offshore-like jurisdiction. So when we look at IFSC, we'll have to understand that it's a separate financial jurisdiction within India. This is a very important aspect that we need to fully absorb. This large country has two financial jurisdictions. One is for the entire country, and one is specifically for the IFSC. Now that gives a huge potential, which we can leverage. In order to make this happen, again, the lawmakers were very thoughtful to put a very, very extraordinary provision in the IFSCA Act, that is Section 31. Section 31 of the IFSCA Act empowers the central government to disapply or modify the application of any statutory provision or any rule or regulation or notification made thereunder when it comes to its application to the IFSC. That means if you want to modify the application of the Companies Act to bring it on a par with, let us say, the Companies Act of Singapore, the law provides for it. If you want to modify application of certain provisions of the SEZ Act or the FEMA, the law provides for it. If you want to make modifications to the Labor Act, the law provides for it. And how? By delegating the powers to the central government to bring in those changes by way of a notification. That means you don't have to amend those acts, because amending an act is a complex, it is a time-taking and a big complex process. You are able to achieve amendment of an act or a provision of an act simply by bringing out a notification. So we must realize that when the government took the decision to set up the IFSC, we were conscious that these are uncharted waters in a way for us. And when we are competing with jurisdictions like Singapore or Dubai or Hong Kong or London, we may need to, tweak our laws so that we are able to give the best in class regulations and we are as attractive or even more attractive than our competitors. The IFSC was set up in 2015 April, as all of you are aware, but the IFSCA was established in 2020, and it is from 1st October 2020 that it became fully operational. In this last 1 year or so, we have been fully engaged in trying to put in place world-class regulations for the financial sector in the IFSC. That means initially the first set of regulations have basically been the domestic regulations which have been extended to the IFSC. So they had some limitations. After the unified regulator was established, we reviewed these regulations and we have now come out with IFSC regulations which are aligned to the international best practices. So if you take, for example, the banking sector, you have comprehensive regulations and a comprehensive rule book all put in one document. When we look at domestic regulations, for example, when we had adopted the RBI regulations, when we did not have our own regulations, they were master directions, circulars, voluminous, about 1,500 pages of this in different places. Now, the banks functioning in the IFSC have just one handbook, and everything that they can do or cannot do is contained in that one handbook. So, to that extent, it's a very simple sort of, regulatory framework and very easy to comply with those requirements. Similarly, when it comes to the capital market, we have tried to, because we have the advantage of being a late entrant, we have tried to consolidate all of these into 4 broad categories. We have already taken out regulations for market, infrastructure institutions. We have taken out regulations for issuance and listing. We are ready to now come out with regulations for market intermediaries, and we are in the process of finalizing regulations for fund management. So the idea is, again, you have all these regulations, in a consolidated framework so that it is very easy to operate under this sort of framework. We have also looked at many new opportunities, and we have come up with new set of frameworks, guidelines, or regulations for promoting these new activities in the IFSC. For example, we are all aware that we have one of the largest aviation markets in the world. We are poised to become the 3rd largest aviation market in the world, both domestic and international put together. But at present, in the domestic area, we don't treat operating lease, that is, aircrafts which are procured under an operating lease arrangement, as a financial activity. We do not recognize it. The Banking Regulation Act does not recognize it as a financial activity. So, under the IFSC Act, it has been notified by the Government of India as a financial activity. And we have also put together certain tax incentives and certain other sort of simplification of processes and procedures to create the proper ecosystem for leasing to be done from India. As a result of these efforts, I find that at least 10 leasing companies have already set up shop in the IFSC, and some very large entities are in the process of setting up, their branches or their subsidiaries in the IFSC. Now, we find that already leasing of small aircrafts and helicopters has started, taking place, and a few aircrafts and helicopters have already been, leased out of the IFSC. So this is a new opportunity, and we feel that today most of our requirement is being procured from Ireland and China. Gradually, that will shift to the GIFT IFSC. And if leasing shifts to GIFT IFSC, then the MRO business also will shift to India. You can just imagine the amount of savings you would have, and also the amount of employment generation we could create. This is one example. Another example is the global in-house regulations. So what we have done is, because the IFSCA Act allows us to regulate only financial institutions, financial services, and financial products. So we have defined this in a manner that any activity or service which aids and assists delivery of a financial service or a delivery of a financial product is also coming within the ambit of a financial activity. So under this interpretation, global in-house centers have been defined as a financial activity. Already Bank of America has set up a global in-house center in the GIFT City. I think for Standard Chartered also it's actively under consideration. And we are reaching out to many other financial institutions to set up their global in-house centers, even if it's their second center or third center or fourth center, if they are diversifying, spreading out their centers across the country, then they should consider GIFT IFSC as one of those destinations. Now, this creates a lot of employment, because a global in-house center employs thousands of youngsters, and these are high-end global in-house centers. They're not BPOs. So this is another area where a lot of expectations are there, and the authority has taken a lot of steps to promote this industry. We are also looking at the International Bullion Exchange. We already come up with the regulations for the International Bullion Exchange. It's very heartening to note that BSC, NSC, CDSL, NSDL, and MCX, all of them have come together to establish a holding company for the bullion business in the IFSC. And they already floated the subsidiary, that is the Bullion Exchange, which will function as the exchange and also as the clearing and settlement corporation. And CDSL has been, recognized as the depository for the bullion. The detailed bylaws, the guidelines, everything have been brought out. Now the advantage is that once you have an exchange, because India, unfortunately, though we are such a large gold economy, we are the second largest consumers of gold, next only to China. And our above ground reserves of gold is estimated between 20 to 25,000 tons, which is more than what US, EU, and China central banks hold together. So much of gold is there, but much of it is in jewelry form. And it's not a very productive asset. It is lying unproductive. We also have a very fragmented, market as far as gold is concerned. So the idea is, once gold imports are channelized to the bullion exchange, we will have, the advantage of price discovery, transparency, quality assurance, standardization, etc., etc. Today, in gems and jewelry, we are a dominant player. If it is diamond, diamond cutting, diamond polishing, we are dominant. Maybe 80-90% of the market. Most of it is done in India. But it is not so for gold jewelry. Though we have such accomplished artisans, machine cut gold jewelry is being consumed all over the world. One of the reasons is that the quality of Indian gold, doesn't have global acceptance. And one of the reasons for that is, sourcing integrity, delivery standards, all these can be ensured when you have an exchange-based, procurement. So I feel now with this international bullion exchange and a bullion exchange also being planned in the domestic area, recycling of gold will take place, and gold is an asset. And as a financial asset, I would say, will gain more and more importance. So over a period of time, you can totally dismantle the controls, whether it is the high duty levels, which is today, 7.5%, effectively 10%. That can drastically come down, and you can have more and more participants on the exchange, and maybe in times to come, the export restrictions also will be phased out. So I look at this as a game changer type of intervention. So the bullion exchange, it will also help the domestic players to hedge their risks very effectively, because you will have an international exchange, so they can hedge their risks also on this. And gold ETFs and so many other opportunities may come. Unallocated gold accounts, gold leasing. We can also develop a connect between the international bullion exchange and the domestic exchange. So there are huge opportunities which will be unfolding with this bullion. Also, I think trade finance is a very important area, and if you have a very effective trade finance arrangement, then our SMEs can also benefit a lot. Today, what happens is large corporates can access, foreign capital, they can access external commercial borrowings. But what about small companies, medium-sized companies? They find it very difficult. I feel that the IFSC can become a hub for SMEs. It can also, intermediate for large entities, but it can be a very, very effective hub for SMEs to access trade finance when it's cross-border. So essentially, because it is like an offshore center, for cross-border transactions, it's very efficient. So the authority has already come up with a framework for international trade facilitation. Just like you have the trades platform in the domestic area, which is meant for the MSMEs. Here you will have a platform for trade financing in the cross-border transaction context, and it will not be confined to MSMEs. So this will provide huge opportunities, for very, very, accessing trade finance at a very competitive rate, and it will enhance the competitiveness of the Indian industry. There is also a huge opportunity, in the area of real-time settlement of, multi-currency settlement. I think for you can have, like today, the NEFT and RTGS, etc., is so effective for domestic, in the domestic context for remittances. But when we look at cross-border remittances, there's a huge cost attached to that. Today, for settlements, foreign currency settlements, even between the Indian banks, all banks are having their nostro accounts, in a bank in the US. And then, the settlements are taking place after a lag, time lag. Our proposition is, and even the Thorat committee had recommended, that we should explore the possibility of having local clearance and settlement, for the IFSC region and for the entire, country in the IFSC. So, in the initial phase, it can have the backing of the Reserve Bank of India. You have an international branch of the CCIL. Some Bank of India, maybe SBI can be the settlement bank, or there could be other banks. Initially, you can start from USD, then you can go to euro or yen or sterling pound. So this is again a very major possibility. This again sort of brings in a lot of sales. What I'm trying to emphasize is that we can, in a way, emerge as a financial laboratory, national financial laboratory, for experimenting, this capital account convertibility in a phased manner. So we are, in discussion with the Reserve Bank of India on many of such proposals, including the possibility of having, a CBDC offshore INR. So you can hold the CBDC offshore INR in the IBUs in the IFSC. It can be used for settlement between non-resident and resident, and between non-residents also. But the Reserve Bank would have full control, on the issuance, on the conversion, etc. So these could be some of the initiatives which will actually give us the advantage of, convertibility, but in baby steps, in a gradual manner. I see a lot of potential, in our international exchanges. But I find that today, the type of volumes which we wanted to see are yet to come. But I'm happy to note that in the last 6 months or so, it has become quite popular for listing, debt securities. Recently, Renew Power had an exclusive listing of their bonds, amounting to, I think, 585 million. Then you had HDFC doing a bond issuance of 1 billion. Recently, we had Axis Bank do an exclusive bond issuance of 600 million under the ESG category. So this is another area, which is very important. And I think green finance, sustainable finance, we can't overlook this. Today, India, the way India is growing, and the goal of being a 5 trillion economy, you would need a lot of foreign capital to come to the country. I don't know, the estimates would be very high, but I had read somewhere that if we have to achieve our sustainable development goals and also meet our commitments under Paris Agreement, we would require investment to the tune of about 8 trillion or more, and half of it will have to come from outside. So whatever, I mean, that's some report I had read. So that sort of money we need to attract, foreign capital we need to attract. Now for that, you need a very strong intermediation and hassle-free sort of flow of foreign capital. Even, in the IBC, when we looked at the insolvency bankruptcy framework, there were there was a lot of demand from foreign funds that we are not able to participate adequately in the insolvency related resolution plans, because we had to necessarily come through an ARC, and the ARC had very limited capacity. So though the demand, the propensity for a lot of foreign funds to flow into insolvency resolution was there, the mechanisms were such that those funds could not be tapped in full. So even those sort of areas can be looked at. I think it is here that you know alternative investment funds have become a very important source for getting capital, and the authority has put in place a effective framework. Of course, when the fund management regulations come, you will have a much more elaborate sort of subordinate legislation on this. But for attracting foreign funds to come here, especially India-centric funds which are today located in, say, Mauritius. I'm told hundreds of them are located in Mauritius. Why can't they relocate to the GIFT IFSC? And for that, already a lot of measures have been taken. The requirement of obtaining a PAN card has been removed. Also, the need to file returns that also has been removed. And complete tax neutrality dispensation has been put in place. So there is a lot of potential, lot of foreign funds which are looking at investing in India. In close proximity, they can set up their funds, and they can invest. Even the IBUs today. I'm happy that in the last less than a year, 6 foreign banks have opened their branches in the. Otherwise, we had only one that was Standard Chartered, but now you have HSBC also, you have Barclays, you have Citibank, you have Deutsche Bank, and I think JP Morgan Chase, and there are other 6 to 8 banks, which are in the pipeline. So gradually, concentration of financial institutions is also taking place. And banks are market makers; they are the backbone of a financial center. And here, the banks have much more liberty in the sense that they can undertake any number of activities. That means all activities which are covered under the Banking Regulation Act, and the additional activities which may not be covered in the Banking Regulation Act but which are covered in the IFSC Act. All those activities the banks can pursue here. Risk participation that has been opened up. NDF, non-deliverable forwards in INR, is another area where already some steps were taken to see that this NDF business gets consolidated in the IFSC. So you need to have an IBU license, and you need to be an authorized dealer for engaging yourself in the INR NDF. Now, by virtue of this provision, and also we have taken many measures with respect to the platform, etc. I see that a lot of corridors will develop between jurisdictions where a lot of NDF is taking place and counterparties located in the GIFT IFSC. So I think this NDF is also a major sort of area. And today, INR NDF is, the daily trading volume is about 60 to 65 billion. It is next only to the Korean won, South Korean won. So this is another area where a lot of potential is there. I think the fintech, because when you talk about finance today, it's incomplete if you don't talk about technology. So I think fintech is again a very important area, and we want to leverage our strength with respect to cross-border fintech. So we can become a gateway, and we have taken some steps in that direction for foreign fintech companies looking at market access in India, and for Indian fintech companies which are looking at market access overseas. And we do this intermediation through, number one, our own regulatory and innovation sandbox, and our own initiatives with respect to incubation centers, accelerator labs. We are also in the process of bringing out a fintech incentive scheme. So these are some of the initiatives, but we are developing connects with domestic fintech hubs, international fintech hubs, and also with international regulators. So this enables, soft landing, it enables cross referrals, and our fintech industry can greatly benefit from this. Most importantly, when the Companies Act was, last amended, an amendment was carried out which would enable unlisted Indian companies to list overseas. So the underlying rules are yet to be notified. So naturally, the provision has not been commenced as yet. But we are very hopeful that sooner than later, that provision will commence. It will enable the startups, the tech companies of India to list in IFSC instead of looking at listing at Singapore or something. And what is important is that since this is in a way a foreign jurisdiction, you can have cross listing by having connects with other exchanges, because there is complete fungibility. Because the instrument here is also dollar denominated, the instrument there also is dollar denominated. So you can raise, the people who have shares, they have purchased shares on this exchange, they can sell it on that exchange. Suppose we have a connect with LSC, just for the sake of discussion, then it can be cross-listed, and you can tap, a wider sort of from wider group of investors, you can raise capital. Now, those advantages may not be there for a domestic exchange. So this is again something we feel is unique. We are also looking at, what tweaking we may require in the Companies Act for the SPSEs, to because you see, as per a report, I think Bain Capital, I don't remember, a recent report on fintech and startups, it was stated that the market value would be about $250 billion. That is the valuation. Now, this provides a huge opportunity for SPSEs, to look at Indian companies. Recently, when Renew Power was done, the whole structuring was done in such a way that, the parent company in Singapore and the parent company in the US, Mr. Rishit Desai will know all these details. Now, the same thing you can replicate in the IFSC. There is absolutely no problem. So the benefits of these mergers, acquisitions, cross-border, movements, by leveraging the IFSC, I think all these benefits can be tapped. Even treasury activities, corporate treasury activities, we have already come up with a framework. They can look at IFSC, and we are confident that with this, I just mentioned about this local clearing and settlement. Once this takes roots, then liquidity also will not be an issue. Once you have that volumes, then treasury activities, everything, when the costs of managing funds will come down, then I think you will become a natural choice. So I also see this happening, that a lot of treasury activities may also get concentrated in the IFSC, and yeah, we have also, because one of the areas like dispute settlement. You see, when you look at, when the World Bank used to come out with its report, I'm told it has discontinued now, but when it used to come out with its report on ease of doing business, they were ranking countries on different parameters. In India, dramatically improved its ranking and became, I think, the overall ranking was 63. But in dispute resolution, our rank was very poor, maybe 130 or 140. out of 190 countries. So in a financial center, dispute resolution is very critical. Speedy dispute resolution, no uncertainty. So we are making some headway. We are close to setting up an international arbitration center in the GIFT IFSC, which will be on the lines of the Singapore International Arbitration Center or the London, Commercial Arbitration Center. We will be able to do this by a little tweaking in the Arbitration and Conciliation Act, and the IFSC has already prepared a proposal, and is in discussion with the Law Ministry to be able to bring this, international arbitration. So what I am basically trying to highlight is that the IFSC should be looked at as a great opportunity to make India global. Now, whether it is issuance of sovereign bonds by the government, or whether it's the issue of big and small corporates in India listing their debt and non-debt securities, whether it is doing your intermediation activities, all this can be done in the IFSC. One of the to conclude, one of the good developments has been this NSE IFSC SGX Connect. So I had an opportunity to review the progress, a few weeks back. I'm happy that the technology has been settled, and they are almost ready for a market data connect, maybe in a few weeks from now, and they may go live by the year end or by early next year. Now, this will bring in almost 5 billion overnight open interest, that sort of volumes into the GIFT IFSC. And once this connect is built, then it can be a two-way process. It does not have to be only with respect to one product. There can be more products. So I think in the new global, financial architecture, this two-way connect between jurisdictions is also very important. So it's not that you always have to compete. So you have to compete, but there's a lot to benefit even by way of this cooperation and by way of this connects. So I think we all have to look at IFSC with this vision, overall vision, and leverage it and treat it as a project of national importance. I think if that is done, for example, banks, the Indian banks are holding assets overseas worth about 180 billion. Now that is similar size of what Dubai, DIFC holds. So if those assets, and 90% of those assets are Indian assets, if those assets migrate to India, you are the size of Dubai, overnight. That's not so simple as I'm stating, but I'm just trying to highlight the potential. So that is the type of potential. And today, even like aircraft leasing, ship leasing, most of our business is being conducted by Indians overseas. So the effort is that all that should come back. And if in the domestic area there are some limitations, all those limitations can be ironed out and removed in the IFSC, because it has a special sort of status and there's a special legal sort of architecture which enables it to do that. So I don't want to, I think I've already gone beyond that half-an-hour slot, but the idea was to make full use of this opportunity and to communicate with all of you and urge upon the corporate India to look at IFSC more intently and integrate it with your plans to become global. So whenever you're thinking of becoming global, whenever you're looking at global footprint, you look at IFSC as the launching pad. I think that will be a win-win situation. We'll be able to build IFSC as a global hub, and you will be able to benefit from cost savings and building the talent and enjoying the economies of scale within your country. Thank you.
Thank you, Mr. Srinivas. This was an exhaustive range of products and markets which you are trying to bring to India or to expand in India. This was truly amazing, sir. I have some of my colleagues who want to, give some comment or suggestion. We are little exceeding time, but if you permit, I will request them.
Yeah, please.
Dipti, over to you.
Sorry. Yeah.
Good evening, sir, again, and thank you for such a very nice, comprehensive coverage of the services that you are already addressing and facilitating for setup. And of course, it will help the businesses a lot. So, in the continuation of the thought process of bringing more business and liquidity, etc., I wanted to make a couple of suggestions. As you mentioned, the depth of market or liquidity in context of equities is still not there, and we are looking at various options and alternatives. So one of the thoughts that is there in my mind is when we have these large issuances, including from PSUs or government-owned assets, I think we can encourage a thought process and facilitate creation of depository receipts on Indian paper. So if a company is say 4,000 crores market cap and going to market, Indian market feels it's a large market cap, but we are still looking at a much smaller float from context of global market. So the first transaction that comes to my mind is something like LIC, where we can create a depository for, let's say, 3%, 5% of the float. Then it can give straight away the foreign interest into the market, because there are people other than FPIs who are interested in this kind of paper. And we have public sector units, a size, having the size which can be used through this route, not just LIC being, of course, the biggest of them all. So that is one, quick, I would say, a method of getting the liquidity into the market. The second is for the players, meaning the entities which register as the brokers or intermediaries. I think we can accelerate the discussion about the passporting arrangement with overseas regulators, more particularly larger markets like US and UK, because otherwise servicing the investors coming out of those regions for an Indian entity who has set up business there is going to be very difficult. So these two will really enhance business opportunities for India and Indian players as well. And the third suggestion is more in the procedural manner, but I thought I'll just mention it. Okay, I noticed that we have issued code of conduct for capital market intermediaries, and we have a whole rule book for banking intermediaries and all. In the context of this being a centralized regulator and common financial market, can we consider a common code where everybody follows certain basic principles that way? And then there can be obviously specific, trajectories or specific codes that will just make everybody think in terms of common financial market. It may not otherwise make much difference to day-to-day life. So yeah, with this suggestion, sir.
No, I think brilliant suggestions. On the first, we already have a framework, so our regulations cover that also. And I think what you're saying is some sort of sponsored DRs,
Yes.
LIC. I think it's a wonderful suggestion, and I will put it in the head of DCOM secretary also, that they should look at this possibility. It's very good.
Okay, sir.
LIC also will get that international exposure. And with respect to that common code, I fully agree. So that will be IFSC 2.0, because right now each vertical itself is so complex and wide. So we are trying to consolidate that. And once we are able to do that, then we'll go to the next level and bring an overarching framework. with
Lovely.
respect to
Yeah.
SupTech, we are doing what you're saying. We are doing that with
Correct.
respect to SupTech. But I agree with you. You should have a common code and overarching framework. But we'll have to move towards that. It's very difficult to bring that straight away.
Thank you. Good to hear that, sir. Thank you.
Can I
And also
request?
passporting, I know you are having that on your agenda, but the sooner we can get it, the sooner our people can get into business. Thank you.
Mr.
Can I-
Srinivas, yeah,
Yeah,
Mr.
Mr.
Srinivas,
Ghosh,
I
go
just
ahead.
had yeah, hi. Mr. Srinivas, we have been interacting quite a lot, if you remember, on the IFC and how to get it to the standards of Singapore, etc. And I think the last interaction which we had was on the global treasury centers, the notification which you had sent out recently. And I think the CII is a perfect forum where this can be launched in a way, because this is where we can inform the corporates as to how they can set up their what are the advantages which come for setting up their global treasury centers in at IFC. I think this is one thought which I thought may be worth considering.
Sure.
Can I request Kaushal Kapadia of Multiples also to give his suggestion?
Hello, Mr. Srinivas. Thank you for the detailed explanation that we received today from you over this conference. I had two things to say. I representing the AIF industry in the GIFT IFSC. Um, you know, as you know, the AIFs have investment managers and sponsors who need to invest into the AIF as part of the regulation. And those are, being a financial service sector, is governed by the regulation 7 of the ODI regulations currently given by RBI. And since the AIF manager is not a registered entity with SEBI as of now, and regulation 7 requires a registered entity, we need to still go to the take the approval route of RBI to make this investment into this, which is where we are facing issues. And probably, our recommendation is that if you can have a kind of a separate uh, section within the ODI regulations for investing into gift city or something, which can be very helpful. The recent notification which was given by RBI exempted certain things, but it was not much useful because most of the managers are not registered with SEBI. So that was one suggestion which you can take in. And second is, the most of the managers, they raise funds, as you know, from both India as well as offshore investors. So typically, the Indian investors are in the India AIF and the foreign investors will be in the GIFT AIF. So both AIFs would typically invest in parallel in most in portfolio companies. So there is a little bit of a ambiguity whether in terms of taxation, whether they will be considered as a association of personnel, an AOP, which is probably a kind of a risk which the investors are seeing over there. So the suggestion is that if a small clarification which can be given, that will be very helpful for the investor community to take the leap forward on this thing. So these were my two suggestions, sir. And
Yeah, I think I'm aware of some of these issues. They were brought to my notice. I think the ODI draft rules and regulations which have been, put out for public comments to the RBI. We are also in discussion with the RBI. We'll be able to resolve some of these ODI related issues. But the only thing is, unless you see, if the when ODI is making investment, that is skin in the game. They're bringing money into the AIF setup in GIFT IFSC, and that money, along with the foreign money, is going back to India. Now, provided the contribution, that is what has come through the ODI, is within those, that minimum, whatever minimum 5% or some absolute figure, there is no issue. if that amount becomes very big, then it creates a funny situation that you are taking out money from India and bringing it back to India. We can discuss this. I think we'll have to look at it. And sometimes by structuring, you can resolve this by having two, funds investing in parallel. Synchronized investment they can make. For the HNIs, you can have a separate fund for, this is separate. This is the foreign fund, and in parallel, you can have an HNI fund, and they will invest. I don't think that association of persons issue will really come up, because it's only a structuring. Otherwise, in a domestic air, both the monies came into the same receptacle. Am I right?
That's right. In a
So
domestic air, it would have been a unified
this
fund.
can be discussed.
Right.
Because what's really happening is when in a domestic AIF, both the pipelines are coming to the same receptacle. That
Right.
is being treated as a domestic investment,
Correct.
because it is owned and controlled by a resident entity. All right.
Right.
Now we are saying that after the IFSC has been set up, we want to have the receptacle pooling the foreign funds in the GIFT IFSC.
Right.
And the domestic fund will also will be collecting the. Is that the point you're making?
Yes, sir. Absolutely. Yeah.
So
We can. Yeah.
I don't see any major issue, but if that has been the legal interpretation, we can look at it. We can take it up with the Revenue Department, and it's better that your industry, CI or somebody, you can raise this issue.
Sure.
That will enable us to take it up with the Revenue Department and try and resolve it.
Sure, sir.
Definitely, sir. We will collect all these suggestions and send it across to you. Sir, if you permit, I still have two members who want to suggest. One
Yes.
is Anupam from ICICI Bank, and then Mr. Nishit Desai from Nishit Desai Associates.
Yes.
Anupam?
Yeah. Thank you, sir. Thanks for laying out the vision and the depth and breadth of opportunities. The financial innovation that you talked about is a big agenda at IFSC Gift City. And you also talked about how, while there are multiple fintech hubs in India, how will IFSC Gift City will actually, differentiate itself. But at the same time, different financial regulators also have different sandboxes. So how will that get integrated here? Because that will be an important aspect. Any thoughts that you have on that?
So with respect to the, you have a interoperable regulatory sandbox between the 4 domestic regulators and IFSC. So this arrangement is there, where for a cross-border fintech, IFSCA has been recognized as the principal regulator and the domestic regulator as the associate regulator. So there is an arrangement, and the SOP for that also is being prepared by inter-regulator technical group. So under the subcommittee of the FSDC, there is this arrangement of an inter-regulator technical group, which is looking into this. When it comes to a foreign regulator, there the concept is that of a fintech bridge. So we will have to build that fintech bridge, and we'll have obligations to each other, and then that will enable the cross-referencing. And then once it's the cross-referenced entity, the recipient regulator will have certain duties to perform. Likewise, if we get some reference from them, we'll have to perform those duties, of access and soft landing, etc.
Nishit Bhai?
Yeah, thank you very much. You've been too generous to me today, and Mr. Injeti has always been over generous. Every second morning I wake up and get an idea and call him up and say, let us do this. But the speed at which he works reminds me of Bill Gates' book long ago, that speed, business at the speed of thought, and you've done so much. But very quickly, I think I discussed with you one thought. Now that we are part of GIFT community with our office there as well, one thought that comes to my mind is, can we also create an environment for foreigners or non-residents to come and relocate into GIFT City and extend them, at least to start with, non-resident status under FEMA. Tax will is a separate thing. We can look at it, but that will also bring a lot of what you call family offices, particularly from Europe and from NRI community, and subject to all the other requirements that are required, KYC, etc. But to improve the constituency, including of the professionals who want to come and work in GIFT City from overseas, will create a big combination. And it's a beautiful place. I think everybody who has gone there would vouch for it. And if we can create an environment for non-resident people to move to India, almost every country, I have done global study in immigration, and they have permitted people who either bring something from the head or something from the pocket. I think they welcome them subject to KYC things. So I think if you can create some environment.
I think if you can, Mr. Nishit, if you can prepare some sort of concept paper, you see, on the face of it, what you are mentioning is doable. Because what you are telling me, if I have understood you correctly, you are saying that you give them non-resident status from the FEMA angle. You're not asking for any personal income tax benefits.
Correct.
So I think, we can look at it because right now the non-resident status is very much there with the incorporated entity and even the unincorporated entity. You are now extending it to the natural person. So we will have to look at it now. Only what will happen, what if a resident entity, an Indian citizen, so this will have to be only confined to a non-Indian citizen. If that is your understanding, I think it is doable.
So long as they bring dollar money of a particular amount into the country, that is, most countries have that facility, world where people are migrating to Portugal and everywhere else. Why?
So kindly give us a small note, with this comparative type of thing. We will seriously examine it and, we will make our recommendations.
Thank you. You've been, once again, thank you. Very generous. And thank you, Nilesh.
I only missed out one thing, Mr. Nilesh, because my friend from ICICI is sitting here. You see, we have opened up retail banking. Now we keep, we have a 30 million strong Indian diaspora with 3 trillion net worth, combined net worth. Now I feel when we have opened up this, the banks should aggressively, work towards developing products and onboarding these NRIs or PIOs or OCIs, and tapping, cheap capital, and that will make them more competitive. Otherwise, Indian banks especially, competing with foreign banks in foreign currency is very difficult because your cost of capital is much more than their cost of capital. So they can lend at a much, cheaper rate. And in things like trade finance and all, the margins are wafer thin. So I think it's very important for the Indian banks because you will have an emotional connect also. And ICICI, etc., you have had a large presence in NRI dominated regions abroad. So I think please look at that. We feel that's one important advantage of the NRI community or the Indian diaspora. We really need to leverage that advantage.
Definitely. Thank you, sir, for your time. You really were generous today. We'll collect all the suggestions from members and forward it to you. And we really wish that you end up doing this Bhagirath work of bringing and expanding market. Thank you so much, sir.
Thank you. Thank you.